carefully curated a trading strategy where I've backtested thousands of trades. After hours of testing and backtest after backtest, I think I finally curated the perfect strategy. And this is the exact strategy I'll be using in 2025. And I'm sharing it with you for absolutely free.
It's free real estate.
First things first, hop on your charting platform. I'll be using TradingView. If you don't yet have it, I'll leave a link in my description. Next, for this strategy, I'll be using the 15-minute time frame, so click that. Now, this strategy includes 5 steps, and all 5 of these steps are crucial in the success of this strategy. Meaning, if you skip or mess up just one of these steps, the strategy will go up in flames and you'll lose all of your money.
I am never gonna financially recover from this.
So make sure you follow these steps to a T.
Now watch this drive.
The first step of our strategy is to identify our trend. The market is filled with uptrends and downtrends. Our job as a successful trader we are is to identify these trends and make sure we're trading with them and not against them. This will usually be pretty easy to spot. If a chart is making lower lows and lower highs, it's a downtrend. If the chart is making higher lows and higher highs, it's an uptrend. If it's not obvious whether we're in an uptrend or a downtrend, that probably means you're looking at a consolidating market and you shouldn't touch it with a 6-foot pole.
You don't want to be like this. This is disgusting.
Here we have a chart. Price has been making lower highs and lower lows for the past couple of days, consistently breaking the previous low. So it's pretty easy to tell we're in a downtrending market. With that information, we're gonna assume it'll continue on that path and keep that downwards pressure. So we're gonna look for a short trade to capitalize on it. Now that we know we're in a downtrend, we're gonna zoom in on our chart. If we analyze this most recent price movement, we can see price recently broke this low and is starting to correct a bit. Which brings us to our next step, finding a discount zone. To do this, go to the left-hand side toolbar, click this arrow, and switch to the GAM box tool. This should give you something that looks like this.
I can see what they're doing, what he's doing. I can see it, I feel it. He's cooking.
Go to the settings of the tool, uncheck all of these values besides 0, 0.5, and 1. I'll also be changing the color of these values to white so it's not disgusting looking. Next, uncheck the left labels and the right labels, then uncheck all of these time levels. After all of this, you should get something that looks like this. Perfect. If we go back to our example, price broke all of these lows and is in a downtrend. If we go to current time, price recently broke this low and is starting to correct. Step 2 is identifying our discount zones. To do this, mark from the low that broke the recent low to the previous swing high. This will give us our discount zone. Price will naturally want to go to these zones. Since we're in a downtrend and looking for short trades, we only want to look for trades in this upper discount zone. Meaning, if there are any setups in this lower zone, we would ignore them. Our third step is to identify liquidity on the chart. This is arguably the most important step, as liquidity is what gives our trade fuel to move. But before we get into liquidity, let me show you something. I found a new broker, AAAfx.com, and this is no ordinary broker. They offer Forex, stocks, and crypto. Yes, a 3-for-1. So no matter what silly little thing you trade, they have it. Best part is they have 0% commissions. Yes, you heard me right, 0% commissions for all of your trades. So unlike most brokers where you have to pay fees for every single trade you take, I mean, really sit down and think about it. If you're taking hundreds of trades, those fees can really add up to where you're paying hundreds if not thousands of dollars. On here, it's absolutely free. Plus they're available in 176 different countries and fully regulated. If you want to try them out, use the link in my description and you will get unlimited 0% commissions if you use my link.
You're welcome.
Liquidity in its simplest form is just a high or a low. Traders will naturally set stop losses above this zone, creating liquidity. So if price ever comes back to this zone, it'll naturally hit all these traders' stop losses, grabbing all of this liquidity to fuel the trade to head lower. So to put it as simply as I can, liquidity in its simplest form is basically a fake out. Here on our chart, price made a low, a high, then another low, meaning the high can be a perfect point for a liquidity grab, as there will naturally be tons of stop losses from traders above this high. Not only that, but this liquidity is in our discount zone. Remember, the market will always need some form of liquidity before the real move happens. Next is step number 4, and this is supply and demand. Demand is the start of a strong move upwards. Supply is the start of a strong move downwards. An easy way to mark your supply and demand zones is by finding the first candle of said move and marking from the bottom of the candle to the high of the candle. So here we have a strong move upwards. We find the first candle of this move, grab a rectangle tool, and mark from the low to the high of this candle. This is our area of demand. So now we know tons of traders bought very strongly at this price, and we can expect if price ever comes back down to this demand zone again, traders will have the same exact mindset and want to buy at this price again. Same goes for an area of supply. Find a strong downwards move, mark from the low to the high of the candle that started that move, price will naturally want to come back to this area of supply, then fall afterwards. So if we go back to our example, price started a strong downwards move from this point. So we grab our rectangle tool, mark from the bottom to the top of that candle that started this downwards move. This will give us our area of supply. Important thing to note though is that our area of supply is above our liquidity and is also in our discount zone. Then finally, moving on to our fifth and final step is to enter the trade. So in order to enter our trade, we have to make sure three things are true. First, we need price to break our point of liquidity, which price has done. Next, we want price to enter our area of supply, which price has also done. Then finally, we want all of this to happen in our discount zone, which it has. We enter the trade as soon as price enters our supply zone, set our stop loss above the area of supply, set our take profit at the low. And after setting up this trade, it gave us a risk to reward of 7.47, which is absolutely beautiful. Another side note, with this strategy, you'll often get beautiful risk to rewards, just like we did here, but a rule to follow is that if our risk to reward is under 2.5, we do not take the trade. So only take trades with the risk to reward that is higher than 2.5. We let the trade play out and get an easy winning trade. Let's do an example for a long trade, shall we? First, we do our first step and identify the trend. Price is making higher lows and higher highs and is making breaks of structure to the upside. So we're in an uptrend and we're only looking for long trade. Next, we grab our GAN box tool and mark from the most recent low to the most recent high to view our discount zone. Since we're only taking long trades, this time our discount zone is at the bottom half of this GAN box tool. So we're only looking for trades in this bottom half. Next, we mark our points of liquidity. There's a low right here, which is also in our discount zone, which is a perfect point of liquidity. Next, mark our area of demand, which is the start of this uptrend starting from this candle. And also know this area of demand is in our discount zone. Wait for price to come to this area of demand, set our stop loss below the area of demand, and set our take profit at the recent high. Let the trade play out, and we get a beautiful winning trade. This is the exact strategy I'll be using in 2025, and there's a reason for that, because of how well it works in the market. Don't let emotions like fear and greed cloud your judgment. If you follow each and every one of these steps and follow this exact trading plan, you will succeed in 2025.
I'm really rich. I'll show you that in a second.